Is Walmart nearly $150 stock price a good buy right now? Fun fact, did you know that if Sam Walton was alive today, who was the founder of Walmart, he would be the second richest person on this planet? Yeah, that means surpassing Bill Gates, Warren Buffett, and even Jeff Bezos. But not Lord Elon Musk. If he was still alive, he'd be worth just a little bit over $200 billion, just a bit more than Jeff Bezos, and that's because he owned more than 51% of Walmart. That's crazy. But sadly, he is not with us and his fortune is passed down and split between the Walton family. Hey guys, welcome to Curious Pejjy, and I'm curious. I'm curious if Walmart's nearly $150 stock price is a good buy right now for the next 5-10 years and onwards. So as usual, after researching and putting a lot of hours into this prediction, I made a very easy to read and understandable Excel spreadsheet and graph that looks at it every single year up until the year 2030. And honestly, it's looking good. Now, before we get into it, there is a few disclaimers that you should know. Am I a financial advisor? No. Can you rely on this video in making the choice in buying Walmart stock or not? I would say yes, all information, all stats and facts is from solid data, so nothing has been made up. And I did most of the research, so you don't have to. Can you guys use this video as research towards Walmart? I would say definitely, yeah. Should you guys like this video, I would appreciate it if you guys can go ahead and smash the like button. It'll help me out and it'll push this video out to people who are looking to see if they should invest in Walmart or not. And if you subscribe, will there be more videos like this? Oh hell yeah, man. I love doing these stuff, man. By the way, if you guys want me to work on a specific stock or a company, just comment down below and who knows, that could be next. So we all know Walmart. I'm not gonna get into the length of what they do and who they are. So in short, Walmart is a huge hypermarket retail store. They're usually cheaper than other places, which makes them one of the main reasons why they are successful and a monster in the space. But what I am going to talk about is the important stuff, which is their future plans, how they plan to expand, because with us investors, we want to make our return of investment as high as possible, especially with a company like Walmart because they're very well established. So we need to know exactly what we are investing in and what their future plans are. And as well, knowing that we can sleep at night, knowing that we picked a very good, safe and growing investment. So we don't end up like Wojak. So Walmart, as we all know, their dominance, they have strength, they dominate anything in their path. You know, if you have a whole bunch of convenience stores and Walmart comes there, that's it. Those convenience stores goes rip and that whole market goes to Walmart. They take the whole market share to themselves. Which is sad to see that these small businesses will go bankrupt because of this monster, but hey, it's Walmart for you. That's what they do. But aside from Walmart's dominance and strength, they are heavily lacking in the e-commerce space, which makes it a big priority for Walmart to tackle, and they are. As of recently, Walmart is announcing plans to scale the service, going from in-home being available to 6 million households to making it accessible to 30 million US households by end of the year, which is end of 2022. Which, by the way, guys, if you don't know how Walmart in-home works, you order online on their website or their app, and then not only do they bring it down to your doorstep, they literally come to your home and they put it in your fridge nice and neatly. Like literally. I'm not too comfortable with that as a customer. I'm sure you can opt out to it, but hey man, if it works, it works. They also go on to say that 3,000 associates delivery drivers this year, as well as building out a fleet of 100% all-electric delivery vans, which is pretty cool and taking the matter serious as they should. Now, Walmart's online and delivery section is a place for them to accelerate growth so they can catch up to competition and obviously not to lose market share. But there's also something else that was pretty interesting that they're doing. And that's Walmart Healthcare. Walmart is going to the healthcare space by having stores named Walmart Health in cities and towns, which honestly, it's a smart move. They started their healthcare centers back in 2019, right before all the mess the world got into with COVID. And man, did they benefit. They got a lot of business, like a lot of business. But Walmart Health is such a big deal because the health industry is huge and Walmart has the power to step into and take some market share. So that's pretty darn impressive and thinking outside the box a little bit. Other than these massive news that as an investor like I am found impressive and appealing, other mini ones include increasing automation, efficient pickup, which is alternative to home delivery, and getting into the financial services and data monetization, which is pretty interesting for a retail store, but it's very clear that Walmart kind of wants to be known more than just a retail store. Now, with all this info, does that mean we can go all in? Well, Let's find out. So back in 2021, the peak price was $153 and the current price right now is in the mid 140s. It did dip a little bit, just the whole market did, not just Walmart because of Fed's trying to increase rates. That always scares the stock market. But right now it's at $145, near there. And back in 2021, the total revenue that they did was $560 billion, with the net income being $13.5 billion, with shares outstanding being 2.8 billion. And the EPS being almost $5 per share, with the forward PE at that time, or the PE at that time, was just 31.5, which makes the current price at $153 with a market cap of being $427 billion. As usual, I found the best prediction from Simply Wall Street and I took theirs and I put it into formula over here, and this is what we get. Now they only have prediction up to 2024 and it's really hard to predict anything after that because anything can happen within a year. Take 2020 for example. So here we have to take matters in our own hands, and that's exactly what I did. I made a little chart here that compares the revenue and profit from the prior year, and from 2022 to 2021 there's going to be a 1% increase, and then a 3% increase, and another 3% increase. The net profit, however, from 2021 to 2022 there's going to be a 6% increase, and then a 30% increase, and then a 4% increase. But I need more data as usual. So what I did was that I went all the way back to 2018, all the way to 2021, and this is what we get. From 2018 to 2019, there was a 3% growth, but in the profits, there was a negative 32% decline. Now this could be because they did an investment in 2019 so they can grow more stores, they bought more land, or they just did overall other types of investments like the healthcare stores. However, 2019 to 2022, there was a 2% increase in revenue, but 123% in profits and net earnings, which is literally double. And that's why I'm saying this is why it was more of an investment than a loss, because it jumped that high. They really took their earnings and they just reinvested back in the company. And in 2022 to 2021, there was a 7% increase in revenue, but a negative 9% decline in net earnings or profits. And again, I think this was because they did investments, they did more buybacks, or anything that could come out of the question, because it doesn't make sense for the revenue to keep growing, but they keep losing money like that. It just doesn't make any sense. To me, it's clear as day that this is all towards investments. Overall, giving the revenue a year-over-year 4% increase and almost a 60% increase for profits, but that's because of the investments and all that kind of stuff that they do to expand the company. So knowing all that and putting all these numbers into consideration, it seems that revenue is very, very consistent. And so what I did was that from 2025 all the way to 2030, I said that they're gonna grow the revenue by 3% every year. I think that makes sense. But for the net earnings, to keep everything fair and simple, I said they're gonna grow at a 10% rate, even though Simply Wall Street said they're gonna grow at a 12% rate year over year. But let's keep things conservative and let's say 10%. Putting the 3% into the revenue formula, we get almost $720 billion in total revenue by 2030 and almost $34 billion in net income by 2030. Now we have to find the shares outstanding, and this is very important because this is going to predict the stock price big time. The more supply you have of shares, the lower the stock price. The lower supply of shares, the higher the stock price. And so that's very important for Walmart. So let's see what they're doing. So looking at this chart that goes all the way back to 2006, it shows you exactly what they're doing with their shares outstanding, and it's absolutely amazing. They are literally doing nothing but buybacks. They're literally buying buyback every single year, every single quarter, even back in 2008, back in 2020 with the meltdown. The only time that I see that they sold some shares, that was back in 2006. Other than that, the whole freaking decade, more than a decade actually, they've just been buying back shares, which is absolutely crazy, but that's what guarantees return. That's what really guarantees return. But let's see how much on a rate they're buying back their shares on a quarterly basis and on a yearly basis. So I made this easy shares outstanding chart that tells us the quarterly average and the yearly average, and this is what we get. On a quarterly average, they're buying back 0.4%. But on a yearly average, they're buying back almost at a 2% rate, which is just absolutely nuts. So what I did is that I rounded a bit down because we do have to be conservative here. And I said that every single year from 2022 all the way to 2030, they're always going to buy back 1.5% of shares. And putting that into the formula, this is what we get. By 2030, we get just a little bit 2.4 billion outstanding shares, which is great. That's down from 2.8, so that guarantees stock growth. And EPS follows that as well at almost being at $14, which is amazing, which is really good. And by any chance, if Walmart price goes down to 145 by 2030, the PE goes to 10-11, you already know it's going to be a good grab. All right, now that we found out the fundamentals and what the stock can do, what Walmart can do up until 2030, we can now figure out what the stock price is going to be. But the only thing we have to find out is the PE, so we can see what is a reasonable PE, so we can drag it out until 2030 and find our correct stock price. And by looking at their PE from 2006 again, all the way till now, we can see that now they're peaking in PE, which is a little bit concerning knowing that we have all this data here. But for the most part, we can see that Walmart has been trading sideways for quite some time up until 2015, then just blew up, it rocketed up. Although right now PE is extremely high, I don't think it's ever going to go back to 10 or 11 or 12 unless they have amazing sales and they're just extremely well established. And not to mention, Walmart is in a growing phase. They have not matured, not at all, because they just keep investing and coming up with new ideas. They're going to obviously keep growing. So I didn't say that PE is going to be 12 or 13. Heck, I didn't even say it's going to be up in the 50s because that's just ridiculous. That's a bit too high. So I'm going to say 35 PE is a decent and I think reasonable PE to go with. Let me know if you guys agree with 35 PE. I think it's realistic and reasonable, and it takes a lot of things into factor. So 35 PE. Putting that into the formula, by 2022, which is this year, we should have a stock price of 181 with the market cap hitting $500 billion, which honestly does sound reasonable to me. 2023 is going to be $237, 2024 is going to be $251, 2025 is going to be $281, 2026 is going to be $313, 2027 is going to be $350, 2028 is going to be $391, 2029 is going to be $436, just breaking over the 1 trillion mark all the way in 2029, and 2030 is going to be almost $500 per share at almost $1.2 trillion valuation, which honestly does sound reasonable to me. But looking at Simple Wall Street, they said that no, by 2022 they should have a stock price of 220, and when I calculated the PE, it's about 42 PE. And once we put that into the formula, we can see that by 2030 the stock price is going to be 585, which is just crazy. But I don't really disagree with them either, because they are, Simply Wall Street is pretty much saying that they have a lot of growth, and that's why the PE is high, and that's why they think it's worth more. And honestly, I do see that with Walmart. They are doing a lot of good stuff. They don't seem to fail at anything. They're just too powerful, and really, if anyone wants to go head to toe with them, they're gonna have a very, very rough time. So I can see Simply Wall Street's why they think 42 PE is fair, but I think 35 is realistic and keeping it conservative. Now remember guys, this is only a prediction. Anything can happen. Maybe retail stores doesn't become existence 5-10 years. It's all online, and Walmart right now, as you know, is not that strong or heavy online, but it's not realistic to think that everyone's not gonna shop at retail anymore, even though the data is showing that's where it's going, and e-commerce is shooting up. But at the end of the day, it's just a prediction. Take this as a grain of salt, do more research, and obviously invest safe. Now, when it comes to my concerns with Walmart, well, I got none. They are a huge company that will continue to dominate, grow, and be a blue chip stock for a very, very long time. Yeah, their e-commerce needs to be sped up big time, but they're doing that right now with full force. The biggest concern that I have, if you guys want to dive deep into it, is the interest rates being hiked up. Walmart works on people's money by borrowing money from the bank, and if interest rates go up, this could affect their earnings, their net profits, which can affect their stock price over time. But it's not their first time dealing with this, so I don't think it's that much of a big issue. Conclusion, should you buy some Walmart stock? Well, if you got cash sitting around in a lousy savings account, I would say obviously yes. Not only will you get 1.5% dividends paid out every quarter, but your money will appreciate long term as you sleep peacefully at night. Walmart is in the growth period and will be for some time to come, because they'll have a lot more opportunities to tackle, and they will open a lot more doors as they go forward. They're just a beast. And hey, they are one of the, or not the biggest retail grocery stores on this planet. So if you want to bet against them, good luck. And don't forget guys, these guys thrive through recession and depression. So another beast point again. But yes, I would definitely put some money into Walmart because it's a safe stock and it's gonna grow my money better than a savings account. But would I go all in? I probably wouldn't, because it's not a growth stock, it's a value stock. So it's always gonna make you money and always gonna give you a good return. Again, better than a savings account. Comment down below if you guys would invest in Walmart. I'm curious to know what you guys think of Walmart and if you think the stock prediction we did today is justifiable and if you guys agree or not. Just curious, comment down below, let me know what you guys think. But if you guys enjoyed this video, you guys will definitely enjoy the NVIDIA video. This one, everyone loved it, man. This has to be the best video I've posted so far. Everyone loves it, as well as these other 2 stock prediction videos. You guys will definitely enjoy them. No regrets. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.